Good morning. It's 8 o'clock and welcome to another 1 hour breakfast webinar. My name is Moby, and if I just quickly click through the slides, my bio is there, but first I'll do the disclaimer for this webinar. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, and the only real thing to note in my bio is that I have done this for quite a while and that I do both discretionary and algorithmic trading. Okay, let us get rid of that and turn on the capture. Okay, first thing today is to have a look at what is on our agenda. So we're going to look through today's economic calendar. We're going to do a very, very quick recap of what happened in ETH. And then we're going to talk about prep, that's preparation of what we can use, or if anything, from RTH to our ETH, and that's whether we're trading in Asia or London. And then we're going to delve into, well, maybe the first of many, many delves into the Wyckoff concept of springs, doubles, testing, an area which could be considered as a double bottom or a double top. Okay, okay, today's calendar. Okay, there isn't as much on the calendar as there has been lately. We've got at 8:15 the ADP employment change, which Financial Juice has marked as a red, i.e. of significant importance, and at 10:30 we've got the crude inventories, which obviously is very red if you trade crude and can add some volatility to the equities if the actual release is somewhat different from forecast. Okay, right. Okay, going back to our little agenda. The first thing we want to do was an initial recap of ETH. So if I dim these pictures and we go along and look at the screens, I think if we start off in the trading view screens, because I've zoomed out as far back as is really visible. If I zoom back any more than this, you couldn't see anything at all. You can't see the individual bars, but I think you get the message. Close was around about here in NQ and around about there in ES. And then we broke down on the Asian Open. And if there is a reason, it could be the earnings released by Uber. Or it could be anything, but that could be one of the factors which caused it to break down. The red line here in both ES and NQ is the previous day's low, and we can see that NQ broke down under yesterday's low, tagged it, and went down further before reversing back. It's still below yesterday's low, which means it's outside yesterday's range. For ES broke down. First thing it did was tag or just have a small spring, and we'll get into that a little bit later. A small spring of yesterday's low, recovered, and then tagged it again or close as, and broke through or distributed around here and broke down properly before rebounding, and it's almost back at yesterday's low. And I just want to recap again why I've got these two charts, which I do use. Obviously not as zoomed out as this normally, but normally I have it zoomed out something like that. In fact, that's more like it, about there. The reason why we have these two charts together so that we can see the high correlated action between ES and NQ. And to go into a little bit more details into provide a little bit more clarity why that can be or may be important, is that if one of them tags or breaks through a significant zone or price level, that may be enough for them both to reverse or to continue at that point. If we're going to have a continuation, if we're going to distribute here around the low and then continue, one can drive the other. So it can be NQ or ES, but the fact that one has done it means that the other is likely to follow suit regardless of whether or not it's hit a similar zone, i.e. for example the same yesterday low for ES as for NQ. It doesn't matter that ES on this occasion hadn't hit the yesterday's low. The fact that one of those two symbols had done it is often good enough for the algos to get the price action behavior that we then saw. But again, I don't use these charts in isolation, and a big disclaimer that the VWAP bands that I've got here are for informational purposes only and not for the basis of taking any trades. They're just an approximation of where value is. But we never ever trade with just a bare chart. The idea of this presentation, as with my colleague's presentation, is that we use this to then look at the liquidity over here to see what we get from liquidity presence to increase the probability of setups or trades that we are willing to take. Okay, if we I've only got the ES action from today, so that's basically 1800, that's 6 p.m. New York time, or the Asian Open, which is just about there. I have to reboot to make sure that this presentation runs smoothly, so I don't tend to keep my bookmap running for day upon day, but that is something that is worth mentioning, because when we get into talking about the preparation of how we can use the RTH session in Bookmap as well as the charts to look at zones that could have some significance or interest in the ETH session, yesterday's RTH is important. And so, although I can't drag it down, I can, I can sort of elucidate by looking at the type of action from the previous day that would cause us to market. So, I mean, if this was the previous day's RTH and there was a significant level, and by that I mean when we look at the previous day's action, and I'm sorry, I am delving straight into the preparation and using profiles here, so I will slow down. See, you're in the room, slow down, so hello. Yeah, I was already getting onto that topic, but anyway, let me just say out of courtesy, if anybody's got any questions, feel free to pop them into the Discord or the YouTube. I know that we don't, at the early stages of this webinar, we aren't going to have many live subscribers, and yeah, that's perfectly expected and accepted. But anyway, if anybody does have any questions, yeah, I'm happy to make this an interactive session, so feel free to pop those into YouTube or Discord, and I will, as soon as I see them, read them and comment or answer them. Okay. So yeah, so even though this is not the right session in terms of the ES bookmap for the RTH the previous day, but I'm going to go into one of the first things that we look at. Okay, and I'm going to have to, sorry, I've got the NQ one. Let me go back to ES. Okay, and I'm trying to get into the afternoon session here. Sometimes it can be a bit of a pain looking at a trading view chart on such a small screen. Right, okay. There we go. Okay, what I'm actually looking for is a midday New York time. So again, these are not exact times or reference. What I'm actually looking at is the afternoon action in ES. So you can see here there's something akin to a double top, almost a triple top, since it comes back to the same zone before it breaks down. If this was not an earnings release week, and again, I'll stress how different this week can be from typical weeks, this would be the very first thing that I would look at. Everybody's different, but the very first thing I would look at is the afternoon action. So I'd look at this period midday through till 4, 5, 6 o'clock, whatever the trading view action is, and I'd look at the highs and lows. So here you'd have a triple top or a head and shoulders or whatever you want to call it zone in ES from around about 06, 0625 down to about 03-ish. Okay, so then I would go into the Bookmap chart for that afternoon, and I would do it before I rebooted, obviously, because once you reboot in Bookmap, you will lose certain information when you then reload the same data, even if it is in the cache or the cache that you can load in Bookmap. And if you don't know what I mean by that one, let me just scroll back and explain. If you scroll back, when you restart Bookmap, you will always get, or you should always get, a little left chevron arrow which you can click if you've got cached data on your drive and your local drive, and then you can add data. So what I did, because I think I rebooted around about 7:20 p.m. New York time, so around about there, is I added an hour's locals or 2 hours locals, so I got the rest of the Asian session. But one of the things that you do lose when you restart Bookmap is the SI information. So you can see here that all the stop related information starts around here, which is 1939. I think that's sort of indicative of when I must have restarted Bookmap. So I must have done it around about 7:30 in the evening. So one of the things that you really want to look at, or you might want to look at for those highs that we pointed out in ES for the previous afternoon, was what stop information was up there, what was the delta positioning at, if you grouped that information on the same chart. In other words, you zoomed and dragged into, when I say that, I mean you drag in a bit and you get a certain bit of information, so you can see the particular delta, the accumulation of buyers and sellers at that zone. And you can also get the stops and icebergs information. The stops and icebergs information may be relevant because it may show you what's already been flushed out. If there has been a big flush, there is a possibility, and again, all of this is just possibilities and probabilities, no certainties, that they may not need to or may not want to have another test up and flush it to have a reverse spring or up thrust. But the other thing and I'm going to get into the profile now as well, is that in addition to looking at that information in Bookmap to see what was there, there's one other bit of information that I'd be looking at in Bookmap as well. I'd be looking at the large trades. So the large buy or sell trades, just the large individual trades or clustered trades, or however you have it on your Bookmap, to see what might be retested. So there are a couple of possibilities, or always infinite possibilities, but two of the possibilities are a flush of the activity at that double triple top, and also a retest of the largest trade there. Let me see. Because I tend to zoom in a lot, and I tend to use Bookmap more for the micro action, one of the things that I will do is I have a chart in Sierra, maybe I'll show it sometime, showing me the large individual trades, so I can go back 24, 36 hours very quickly and see, was there a trade of 500 here or 1,000 here, just quickly, so I can reference it. And you'll often see if I'm streaming during the session that I'll have marked that in this column, which is the cloud notes column, that there might have been a 500 trade here, for example. That's just hypothetical because there's nothing marked here. Okay, so that so what we're looking at in Bookmap is what large trades occurred in that triple top area. Is it are there lots and lots of buyers and sellers that could be potentially flushed if price is taken out a little bit higher? and if it is flushed, there's always potential for a big reversal up because we are in a trend up that has not broken the more severe daily uptrend line, which I mentioned the other day. So we're still in a very, very strong uptrend despite any downward action we may have had in this ETH session. So we're looking at big trades, presence, or what presence do you have of the buyers and sellers in those zones, and what stop iceberg information, mainly stop information we have in relation to what happened on those 3 touches of that zone. Okay, right, so I mentioned that we were also going to look at profile. Let me just stop and see if there's any questions. No questions. Okay, all right. Okay, so someone asked in the last webinar if I could have a quick overview of how the profiles interact between RTH and ETH in the sense of how I use the profiles. I would refer you to my colleague Tom if you want an in-depth discussion of volume profile on a day-by-day basis. But this is just this is just a very quick overview of what I'm looking at. So I'm looking at 2 things, or the 2 of the most basic things when I look at a profile chart. And to explain what this is, I think I have done before. The grey edge is the volume profile. The shaded area is a time profile or a market profile. The pink lines are the point of control, or where the most volume interacted in that particular session. The vertical grey shaded zones are evening or ETH sessions, and white ones are RTH sessions. So if I turn on all the evening sessions and zoom out vertically, we can start talking about how the ETH session has interacted with the preceding RTH session and how it may provide some information, and I state some information that could be useful in the following RTH session. Okay, so one of the things that I'm looking at, I mean, sometimes you get picture perfect information. This does not happen very often. It's like an indicator that has magical properties. But this is one, okay. I mean, one of the beauties about having a look at volume profile in Sierra, and I must get back to Bookmap after I do this, so I'm going to do this as quickly as I can, is that you can join value. So you can basically merge all the value together, so you can see where value begins and where value ends. Let me just reset that chart to get rid of all of that, so that we can see individual sessions. So again, the white sessions are the RTH sessions, and the grey sessions are the ETH sessions. So one of the things that, again, I say it's picture perfect, but one of the things that may happen occasionally is that you have clear value that has developed over a period of time. And one RTH session can be considered a decent period of time. So here you have a clear value in this session, which was whatever date that was, Monday. And that value is delineated. Let me get a crayon up here. Let me change color to pink. Okay, that value was delineated about there and there. So you're looking in ETH for a potential flush beyond there and beyond there, so above and below. And that's why I say this session here just happens to be a picture perfect session. So you're looking at value, and you're looking at the opposite of value. So if I get rid of all of that, go back to here, let me just get rid of that and go back to the cursor. You're looking at the opposite of value is trend, or exploration, as they call it in the auction thing, where price is exploring until it reaches value. So in this RTH session, if we turn it into a price chart, and you can see over time what happens, it had value, broke down from value, and eventually found some new value there. Okay, so you're looking at 2 things in the profile. Do you have value, or do you not have value? Okay, do you have value, or do you have trend? So if you have value, is there a potential? And this is when we look at Bookmap and we go back and we see what action was there in RTH. Is there a good probability that there's a reason why they may take this higher just to flush them? And if we actually go and see what happened on that day, so what they did was they flushed the top of the RTH value first, and then they flushed the bottom, and then it formed another value area during the next RTH session. Okay, let me just stop and see if there's any questions. Oh, sorry, I will pause at this point. Torchbearer, I do not do predictions. That is one thing that you cannot use in trading. Nobody can predict the future. You can't even predict the weather. So I don't predict that. I simply, with a 1 minute chart, it's just to help me see a zoomed out picture of what is happening in Bookmap and to show me the direct correlation between ES and NQ. Okay, again, you've used the word predict in your second question. Again, I can't answer that one because we cannot predict. We can only find possibilities or probabilities. We cannot do any prediction. So that is just one example. So yeah, to speak very, very roughly, we are looking at anything from the RTH session. I want to get it back to Bookmap as soon as I can here to see where the value was on the profile and where there was no value and where there was value. So where there's no value, we're talking about low volume nodes like this, where it's clear. And then again, you go back to Bookmap and you see what the price action was in Bookmap around there. So it's basically, yeah, it's a map, and I'm going to now get rid of it, and we can always revisit this in a future webinar to assist how you might then look at the next session. Okay. Right, let's just zoom out again and just have a quick look. I think I've actually missed the news. So let's have a look at what has happened at 8:15. Sorry, I was too busy talking to even notice that the ADP employment change had been released at 8:15. So the actual number was 324,000 new jobs. The expected number was 190,000 and the previous was 497,000, so it was a beat. Okay, it was a beat. That was at 8:15. So if we zoom, if we can just zoom out for a while, 8:15. Yep, 8:15. So positive news, and the market did not react favorably. Instead, it has continued to break down a little bit. Okay, if we just get these back to how we like them and drag them there. So yeah, this is how I effectively use these 1 minute charts, although I think this is on a 3 minute at the moment. It doesn't matter. All right. If you're that interested in 1 minute charts and 3 minute charts, there are some great practitioners around that I do recommend you read their stuff. One is Lance Beggs. I'd look at Lance Beggs and I'd look at Adam Grimes. They both looked at this kind of stuff and they provide some very, very good information. I think Lance Beggs is also very, very famous for his attention to process, just focusing everybody on sticking to a plan and sticking to process. In fact, I think he got so frustrated that he's recently stopped tweeting, and his website's going to disappear as well. But yeah, he is one of the best instructors in terms of looking at these individual candle type charts. Okay, I do not tend to take trades based on candle type charts. There are certain things where I've got some statistics on, on levels, such as yesterday's low or yesterday's high. And again, if I take a trade on that basis, it's not actually on the basis of the individual candles. It's on the basis of the type of stop that it is possible for them to flush through. So again, it's not on the basis of any price action. It's not on the basis of any moving average. And the VWAP is just an approximation of value. Okay. Right. Okay, yeah, so let's look at Bookmap for a little bit, and let's have a look at what's in the chart as we come up to 8:30, an hour before the open. Okay, and give me a second while I just observe. So as you know from my last few webinars, what I tend to do on the vertical scale is zoom out as much as possible on ES and then on NQ or vice versa, just to see any resting liquidity that's been around a long time. And I discount any resting liquidity, or I reduce in my own mind its significance if it happens to be on a particular set of round numbers, being the 50s and the tons. Hey Mothers, I doubt whether I have pronounced your name correctly, but hello. Yep, okay. So if I look at the ES liquidity map or the heat map here, we see some liquidity again at the round number. It's stayed there. It's not huge. Now, if we zoom in and we double check what it is that is at 4550, just so we know it's not. They're not. I mean, it's a nice double band, but neither of the numbers 163 or 159 are significant. And the fact they're at a round number means I'm not going to pay much attention to them. There was a nice big fat 300 liquidity, but that has been taken away. That's one thing you've always got to bear in mind, that you can get great resting liquidity. It provides it can provide meaningful information, and then it can disappear. Again, you cannot foretell the future. Just because something is there does not mean that it will stay there. You know, there is a probability that it will be hit if it stays there. There's a probability it won't be hit, and there's a probability that it will be yanked before the price gets anywhere near it. We're in a probability game. We're not in a certainty game. So that is the ES1 zoomed out. Let's have a look at NQ just to see if there's anything that's been sitting around for a long time. This is for clues for later on in the day. Yeah, this is something that I am doing so many times a day, it's not funny. That's if I am actually considering a trade in the next little while, you know, whether that's 5 minutes, an hour, 2 hours, whatever. I want to know what the liquidity map, the picture is from a high level perspective as well as a micro level. So again, on NQ, I can't see any resting liquidity that's close by. That's not at a big round number here. We have 15,800, and we'll have a look to see what amount that is. That's a decent number, 86, but the fact that it's at a round number means that I am tending to discount that and not pay much attention to it. So if we look a little bit closer to there is nothing there that stirs my attention much, if at all. So there's nothing really to make me excited saying, oh, that resting liquidity is playing a role in the picture. And if I just look, I'm just looking to see where the big trades in NQ were. There was a big trade up at 720, 715, but that's already been tested. So that's one thing that I look in both Bookmap and Sierra. If I'm looking on a slightly longer basis, I've got it to hand in Sierra, so I will have a very quick look. And if I want to see a bit more detail, I'll get into Bookmap and zoom right into the trade to see exactly what happened. Right, so there's nothing on the liquidity map that gets me excited. So, you know, we can go back to talking about doubles and springs and everything like that. Okay, and we have, let's have a look. I think the action in ES may actually, no. I'm just trying to see if there's any nice clean doubles or springs, or there is a reverse spring. Okay, so there's something for us to look at here. Okay, let me get the pen out again. So what we're looking at here is we've got a swing high. That's a terrible line, I'm sorry. and then we have a reverse spring, so there's a breakout failure, it goes up, and this is up just after 1:30, just about the pre-open for the DAX, the German market, um, and takes it out, tags VWAP, and reverses down. So if we get rid of that, we should go into Bookmap and have a look at what happened. So we want to know what information was there at that 1:32 a.m. Price action to provide us with a trade. Okay, so let me get back on the cursor, get on the right Bookmap chart, which is ES, and we're looking at around about 1:30, so we're looking at this area, and the first tag was at 11 p.m. So in fact we could zoom out and see if we've got it. Yep, we have got it there. Okay, now that's quite interesting, because we have the stop icebergs information right in front of us. So at 11 p.m. there was a small, I don't know, let's just have a look. Let me see if we can see. Let's have a look. Let's zoom right into this iceberg. So there's a sell iceberg. It's first a buy iceberg, which looks quite small, and then a sell iceberg, which rests for a while. Okay, this is one of the things that I will say I do look at both in ETH and RTH. If there is a resting iceberg and it has had a significant amount of volume, the people, the sellers have participated to a reasonable extent, and it stays in position, and it's not at an exact round number, I am interested to see if there is any action. And here it's a sell iceberg, so if there's any long type action, i.e. if there are any potential longs to trade towards it to finish the business that the algos or the large player may have had in that zone. So here we've actually got a spring. So this is actually, this is quite fortunate, so we can actually discuss this as, you know, this is something that I would love to have traded, but I was not around. I was rather busy at that time today. Okay, so step one. Okay, we have a breakdown. Sorry, so step one, or the precursor to this, is we've had the Uber earnings release, or just negative market sentiment in Asia, and we're breaking down. And this is at Asian time, so this is, as I said, this is before the Tokyo lunch hour. So we've got a trending, an intraday trending type action going down. Let me just check there's no more questions. No. Okay. We have a sell iceberg in play, and there are two ways of looking at this. One, if you're looking for a trade to go back up, so a long, so you can try and target the same zone. And again, we are looking at high probability, high R-based trades. We're talking about ES, so we're talking about a small stop, but we're talking about equal dollar sized bets. So even though if you'd have got in around here and your stop may have been 2 points, 2 points is only one part of the game here. It's how many contracts times those 2 points give you that dollar value risk that you're going to repeat time and time and time again. The point at which you decide for yourself that you don't want to do that, well, that's fine. My thoughts on this are that equal dollar-sized transactions or bets are the most sensible way to trade these markets, simply because you cannot predict the future. So we've got a target or a target zone. It doesn't have to be this exact tag. You'll often find with these, especially these ETH icebergs, they may not come back to exactly tag. What you're looking is to see whether they get the volume, they get more fuel up around here to go down lower here. So if you set your target at exactly that, it might be that you never ever get filled. So so one thing we mentioned last time was scaling. So say you have your 2 point stop, you get in, you're not going to get in there. That's imaginary. Maybe you got in there. Maybe you got in there. Yes. So what is that? 4, 5, 8, 0, 25, 4, 5, 80, 25, and you got a 2 point stop. So that's for you are the other side of that liquidity. So that would be a reasonable stop. What is your actual target here? Um, your target is I don't. It's just over 1 to 1.5 R. It's not a huge trade, um, but it's worth looking at yourself as to the probability of that trade working out, because it is something that does interest me, that where you have a sell iceberg of a decent volume that rests in the market for a considerable amount of time. It's just because they know, or they have flagged, that they are willing to do business up at that zone. Okay, here they may well have flushed your stop, and you're also trading against the market direction. So you could say that's a foolhardy adventure. If you had a trend line, or even a volatility-based moving average, or whatever, or volume-based moving average, whatever you want to concoct. And believe me, I have concocted just about every indicator there might be. Sorry, I'm just stopping to read a question by MDHC Clothing. Would that target zone be VPOC on a market profile? I will have a look. So the target there was 4583 or close to it. At the time that happened, well, we got on the right chart? Yes, we are. Let me just get rid of the other. Let me get rid of the other days, and then we break this one down. Yeah, that VPOC is still up there, which is up at about 4580, and the flush was there, 136. So it was a flush away from the VPOC, to answer your question. So the target wasn't there, but all this action around here was at the VPOC. This is where they formed the value, and you can probably see it in these columns that they plenty of buying and selling in those columns. Yeah, but the big flush, and we can just zoom back down. Yeah, I said there were one of two things you could do. You could play longs towards it, and I'm saying it's quite likely that if your first entry, you'd have been stopped out, and maybe you'd have got a better entry. Yeah, maybe you'd have taken one of these two buy icebergs, with a 2 point stop, maybe a 2.5 point stop, and a slightly bigger target. If you'd got in with this iceberg here and you'd managed to get in, you're in at about 78, 75, 78, 50, and again you've got that 4583, so you've got a 4.5 point target, and again, so you're over 2R this time round, and you've got action. And if we actually see if our friend the market pulse would have helped us on this one. So if we zoom out a little bit, remember this is just a help to know when instantaneous price action is stretched. So we're looking here, if we're going to go long, where does it get into this red zone where it's at the minus 70 percentile? And yeah, it does there, but it does there as well. So yeah, I mean, there are a few different points. 1, 2, if you count from there onwards, 1, 2, 3, 4 of the red zone, and provided you had, say you were in there, 79.50, 77.50. Yeah, no, provided you had a 2.5 point stop, even a 2.25 point stop, maybe a 2 point stop, you were fine. So yeah, so what are the triggers to get into that trade? Okay, let's have a look. Let's zoom out again. Okay, there are a few reasons why you might consider that trade. 1, the resting iceberg. 2, the buy icebergs. 3, the market pulse. 4, the stop runs, the MBO stops. You've got 45, 55, 40. Again, they're small, but we're talking about the Asian session, so you're not going to get huge ones, or unlikely to. When you get something as big as that, that's wow, and that is a significant indication. And also the market pulse, and this at that time thickish band of liquidity. first touch of a thickish band of liquidity, you often get a push away. So you have all those factors saying long. But as I said, there were two different ways of looking at this beast. The other one was that we were breaking down, and if we look at the on the on the on the 3-minute chart, we were underneath the previous day's low. We were underneath VWAP. And yeah, we could have said we are not taking long. So we could have taken it from the opposite perspective entirely. So we could have just said, well, we'll wait, and we'll wait until we have a decent flush upwards. And when you're going to do that, you're looking, if you're going to use the double top spring testing of significant zones, whatever you want to call this. And I will get the old Wyckoff picture back up just temporarily. Let me just get that up. Okay. Yeah, there's a whole area there, a distribution zone, which this actually was, that you could equate this to. I may come back to that when we, and have a specific Wyckoff session, or just Wyckoff and Bookmap, how we actually translate this map into Bookmap and go through individual sessions minute by minute, and how each of these terms, I might even do my own one, because some of these terms I don't tend to use. Failed rally, I use failed breakout, so I call that an upthrust. So that's not the terminology that I use. And again, I didn't draw this one. This is just a generic one that I pulled off stock charts or wherever I pulled it off. It's not the one that I learned with Wyckoff, but this is the type of action. You have a top, or you can count either of these as the top, tests it, fails to go beyond it. It's called an up thrust or reverse spring, and then it goes down. Okay, where are we? I'll just check on the time. 8:42, so we've got about 18 minutes left. Okay, and let me get rid of that picture and go back to Bookmap. Come on, picture, disappear. Good. Okay, we're on the right chart again. Yep, okay, here we are again. Sorry, it was zoomed out. So you're waiting in that zone there, the 83 zone, where that failed iceberg was, where that previous reasonable swing high. So you're not looking at every single micro swing high there. I mean, you could play that game, but that is a different type of trading. That is scalping or micro scalping. We can talk about that sometime as well. There are practitioners that are very, very good at that. And if you are into micro scalping, Bookmap is definitely a platform that you should be looking at. Anyway, on this occasion, we were looking at a significant swing high, which was in this region, and it was that one that got flushed out on this 313 MBO stop, and that would have been a trigger. So yeah, you might have said, oh, this is a stop, and just taken that one, but that was not quite in the right price zone. So the actual failed spring or failed reverse spring was up here at this price zone. But that is a trigger. That's your market pulse, but more importantly, it's your MBO stops. And then when we look at on the columns over here, do we have an unfinished auction in ES? No, there are only buyers at that price. There was 63, which is a significant-ish number, but if you look at the actual volume of the buyers, it's relatively tapered. Or you look at the delta profile, it's relatively tapered. That is a good trigger in a market that is going down and breaking down. Exploring how far it can go. The other factor in its favor is that you have this lovely liquidity below. So there is a belief or some level of probability that they're going to go down and transact down here. And again, these are not at round numbers. So we've got 4575, we've got this band here from 72 to 73, we've got this band at 68. So then if we watch what happened, after the trigger, and the idea here is scaling. So, if you've got your 2.5 point stop, and I would not personally go more than 2.5 point stop in ES at that time of the day. If you're having a very volatile London session, yes, you may well need a wider stop, but this was before the London session. This was actually before the German pre-open, which is around about 150-ish, which is around about there. So I would not have had a reason myself to take a wider stop. You've got a liquidity-based wall potentially, but it's not very strong. So maybe that you have a reason for having a stop up there. But again, it's not the number of points. It's the number of points times the contracts. So in my personal view, and again, each to their own, in my personal view, you need a methodology, a process to get in the number of contracts times the stop that you take that gives you that equal dollar value risk on each and every trade. Okay, so yeah, so maybe you got your 2.5 points stop and you got in around about here on a market entry. I have a feeling that that would have been the most likely way to get in. A limit may not have been lucky enough to get in on this way, but say you got in around about here, which is the 82, 20, 82, 82, 25, 82, 50, and you've got a stop of 2.5 points, then yeah, you'd have got your 1R, your 2R, and you've got this lovely liquidity down here, and the bottom half of this liquidity band stays nice and of interest, and you're expecting the first bounce, the first touch to bounce. So it bounces a little bit there. The next liquidity band, it touches, it bounces, it bounces. Here you've got a triple bottom. There is a price action rationale, probability, possibility, whatever you want to call these things, that the more touches you have of a wall, the more likely it is to eventually break. And the beauty that you have in Bookmap there is that you can look at the actual transactions occurring at that wall. I know you've got a buy iceberg, which is absorbing sellers, so you can see that there were at this stage. Let me make sure that I have got every level. Okay, yep. So you've got a delta of 585, and that's 585 sellers. So the micro scalpers would see the buy iceberg and they'd be scalping long on the basis of it, or they might be. And the people wanting to trend would be looking for a way to get back in. One, to have that as a target, initially to have the resting buy iceberg as a target, and then to have that resting liquidity, which was down there or actually down here, 4, 5, 6, 8 as their main target. And the fact that you've got 585 contract transacted is a factor that strengthens the probability that it will go down, because this particular auction isn't finished. So if we had a look on the profile at that time, it would look a little bit fat. In fact, if we stretch out this one, yeah, you can see it looks quite fat. In profile theory, again, this is just theory, there is no predictions and no certainties. It will often be a good initial long setup, but that is kind of an unfinished or poor low, so that at some stage, it may move quite away first. At some stage, it is likely that will come and finish it and go through it, and not end in such a fat or poor low. Okay, I mean, just shrink that one back. So we see what happened. Eventually hits the wall, hits the wall, hits the wall, and goes straight down and takes out the resting liquidity below. So, there was some very, very good action in ES, which is unusual in today's session, but good. But we're in earnings week, so anything can happen. And earnings, because a lot of them do take place after the RTH market close, you often get extended rallies or falls or declines, whatever you want to call them. And so, in other words, you get more volatility in the ETH session. One of the other things that I look at, and I've mentioned this one before as well, is that I look at the relative volume. This was a calculation that was invented. One of the people that invented it, I think, was Peter Davis at Jigsaw. So it's his sheep accumulation index. So it's looking at relative volume minute by minute during the day. Right about now, which is 8:49 a.m., that is 202%. That's 202% for this time of the day, which takes into account all volumes since the Asian Open up till now, vis-a-vis the last 10 business trading days. So in other words, it's very high. where you have high relative volume in ETH, that is another factor that you're going to get volatility, i.e. there is a chance that the market will run and run. Okay, let me stop and look through the comments or questions that we have again, which are in the YouTube thing. MDHC. Okay. Yeah. I mean, Wyckoff, there are a lot of sources on Wyckoff. I mean, I'm happy to spend sessions on talking through how Bookmap comes into play. Bookmap is like an X-ray. That's the nickname of the product when it was first released. It is an X-ray into the market, so it's an X-ray into how those Wyckoff type price structures occur, how they actually develop and build. So, Bookmap lets you see them so that when you then go back and zoom in, you can take them apart and see what information there was that could have helped you get in or not. So one thing again I should stress, you don't have to take a trade. You don't have to take a single trade. It is entirely up to you. There will be sessions, there will be sub-sessions, there will be whole sessions where the price action or the activity, whether it's the level of volatility or the action that you see, whether it's on a heat map or anything else that you use, means that you do not have enough conviction to take a trade, and that is absolutely fine. You can waste your capital very, very quickly if you take meaningless trades that are not in accordance with setups that you set out in your trading plan. Each and every instance of any setup, and again I will stress this, I mentioned this the other day, is 50-50, and each and every instance of the same setup is not going to be the same. I think maybe in some future webinar we can go through process preparation. But one of the things that I would stress is that any process preparation, all the mental prep and reading through your trading plans and all of that stuff that you do before a session, you don't want to get your mind so regimented that you do not have the flexibility to see the multiple different variations of the same setup that is in your trading plan, because they will not appear in exactly the same way every single time, or they will appear in a way that you do not recognize them in real time. So having that mental flexibility to open up your mind to be present with the price action, to be in the here and now, so you can see them actually develop, gives you a much greater chance of actually grabbing onto them so that you can get a decent number of hours from that trade. Okay, 2052, right. Let me just see, yeah, we're on doubles and springs. Yeah, let's have a look at the actual live action here. So we have a small sell iceberg, not a lot transacted up there, unless I'm not seeing it properly. Let me just zoom up. And then they moved price down and they went through it. Okay. Again, I think that's another good illustration. These icebergs are an interesting bit of information, a tidbit, one factor, just one of the factors that you're going to use in your trading analysis. They can be wrong. This one, you may have formed the view that, oh, it's going to go up there and then it's going to go back down. Anything can happen. This one, they only traded a little bit and then they moved down and they went straight through it. Doesn't mean the price won't go down, doesn't mean the price won't go up. It's just one piece of information. You look at all the factors together. One of the things that they do teach you, certainly in Wyckoff methodology, is confluence. So I think that's one of the things that we've looked at in the last hour. We've looked at confluence, i.e. how many factors and how many good or significant factors play a role in pointing you into taking this trade and validating your belief that it may result in one of the winners as opposed to the many losers that you might have during a session. Okay. All right, let us have a look at NQ as well, just to see what's happening there. So we just click the chart just to remind us where we are here. So we're still outside yesterday's range. Yesterday's settlement is in pink up there. So we're getting very close in ES to getting back into range. And how many touches we had? We had a little distribution zone, retest, breakdown, first test back up to the range, and now we are getting a little bit closer. So it will be interesting to see whether they can get it back into range during the RTH session or whether we continued to move down. But so far in this ETH session, we've had good range. And one thing that tends to happen, and again, the word tends is important. It's not predictive. Nothing is predictive. One thing that can happen or tends to happen is that when you have good range in ETH, you often have a good range or large range in RTH. So if you are somebody that is looking for decent size swings, that may be good news to you. Okay, I said we'll look at NQ as well. Okay, let's have a look, see if there's any more resting liquidity of any information. Nope. There is a level here at 20 that they're holding, so we zoom in and we drag up and we just see if there's anything there. 23. I should mention the kinds of resting liquidity in terms of volume of orders that would grab my attention. 20, no. 23, no. Anything above 30 during ETH and NQ, you can show some interest or excitement in, but 23, no. And nothing else that's even forming as resting that's staying on board that could grab one's attention at this stage. Again, does not mean that nothing will develop in the next hour. Lots and lots of things could then develop. But we've got a quiet economic calendar, so it gives them the chance to explore the ETH range during the RTH session. Okay, you asked where's yesterday's high and low. Yeah, you can see that on, if I click into this and just reset this chart, you want to see yesterday's high and low. You've got yesterday's high up there and yesterday's low there, and we are almost we're almost back to the most traded area overnight, but we've got a little way to get into yesterday's range and a long way from where settlement was and where the most value traded or the most volume traded was. So in other words, we are below yesterday's range and still not showing us strong action suggesting that we're going to go and get into it immediately. Okay, again, we're going to zoom out and have a look at the resting liquidity in ES, just seeing if the picture has changed. So they've added 100 there, and this is one of the reasons why this liquidity marker is so useful. You can see what it is that they added and when. So just after 8:45 they added 100, but it's at a round number, so I kind of discount that, but it's just interesting that they did that. Okay, and on this iceberg here, I mean, one thing that's worth pointing out is that I've got these numbers really quite small. You can choose the font size for your stops and icebergs indicator. I zoom in and out all the time. That is the primary reason why all my numbers are so small, and I do apologize for that if there are any real difficulties reading it. But it's just because I want to be able to see the whole picture. Sometimes, especially on thinner instruments such as NQ, the manipulation or the pressure, and by pressure I mean pushing with large orders, takes place a long way away from current price action. So again, one of the benefits of using Bookmap is being able to zoom out vertically so you can see if there's any new pressure that's being applied from far out. And there is something missing on my chart, so I better put it back in. I seem to have to do this every time. Okay. And the other thing I look at here is there a big disparity between the total of orders over the 30 price levels below versus the 30 price levels above? Here we've got slight significantly more buy orders than sell orders within that 30 price level area. 30 price levels is just something I've chosen. You have to do your own research to find a number that you find that might be of interest to you. Right, okay. Yeah, with that, I think we are coming to the end of the hour. I think we are right on the end. So thank you very, very much for listening. I hope there was